Good morning, subscribers. Welcome to Daily Pre-Market Analysis. Myself, Priyesh Bhatia. Nifty yesterday session opened on a negative note, came back very strongly to end on a positive note with nearly a 0.5% gain. Most importantly, if I follow candlestick, we are witnessing the bullish candlestick pattern called the piercing line. The piercing candle. So if I just look at the structure over here, this is the bullish piercing candlestick pattern, and it has formed at the multiple support zone over here. So if I look at the Fibonacci, we have seen 23%, 23.6%, which is the first leg of Fibonacci level. If I just look at from the leg of 15,183 to the leg of 17,992 as a high, it placed the 23.6% were placed at 73.29 and we made a low of around 73.45. Most interestingly, this low was made right at the opening of the day and it was not revisited the whole day. Though we saw 17,400, 430, 450 levels multiple times, but the low was intact for the whole day. And in the end, the last hour or last half an hour, I would say, the momentum came back very strongly, and we ended on a positive note, forming the piercing candlestick pattern. On Nifty, whenever the bullish candlestick pattern after a swing is formed, it generally marks a major bottom structure. So as of now, I believe 17,300, 345 will be a major support bottom for the next leg of series as well, which is the September series. Though we are into the expiry week, tomorrow is the expiry, and if I just look at the SGX today morning, it's indicating a negative opening of around 50 points, 55 points now. So 17,554 is the SGX level, which is trading as of now at 7:50 a.m. So if I just look at the RSI, yes, it's been slightly onto the downside, but if I just follow the rule of 40-60, 60 stands out to be a good buying opportunity in the bullish zone, and it is turning upwards right from the 60 level if you look at the RSI in the bottom structure. If I move on to the hourly chart over here, okay, so right at, let me remove this. Yes, so if I just look at the right at 23.6%, as I mentioned, the candlesticks has formed the bullish. If I look at the bullish, haram is also formed right at the hourly chart. There is the average which I generally use is the our equity master proprietary called true stop system, which is a trademark system. And if I just look at the averages over here, it indicates that we may see a couple of days of range bound. So 17,700, 17,300 tend out to be a slightly range, and I believe this would be the writer's expiry as of now. Even if you look at the derivative structure over here, we have seen 17,900 be aggressively return, 18,000. We saw some unwinding, but still 2.5 lakh of OI has been there at 18,000 call as well. 17,800 at the last 30 minutes, last 45 minutes, we saw unwinding coming into 17,800 because markets were booming positive. On the put side, 17,500 stands out to be a 1.5 lakh of OI, which is again a support zone. Believe 70,400 again being written, 56,000 new contracts has been written. So 70,400, 70,500 is now indicating a support zone. But I believe as per technical, our true stop equity master true stop proprietor system, 17,300, 17,700 is the range I am expecting into the current scenario as per the expiry. Though if I look at the RSI in the lower bottom, it's been turning positive from the oversold zone. So we have seen that oversold right in June when market were bottoming around 15,183. The same level have been seen when markets corrected back towards 17,350 levels. So keep a watch on these. I think probably post expiry we may see a bullish journey resuming. But as of now, 17,800, 17,700 stands out to be a resistance zone, and 17,300, 17,400 turned out to be a support zone. Remember India VIX also, because India VIX is quite for a long time trending into a range for, if I just look at, yeah, let me move on to the daily over here. And if I look at, it's been trending in a range for quite few days, for quite few months since July. So keep a watch on the move about 21 would be a very uh, trouble for the option writers. So keep a watch on this 21 levels. Though I have it has been 19, 19 and a half has been high, so I'm just keeping a percent cushion over here. So about 21, we may see the option writers coming into the trouble. Coming on to the Bank Nifty, which was have seen a huge comeback in the yesterday session. Again, uh, forming the bullish engulfing over here. So on Nifty, there is a piercing pattern. The Bank Nifty, there is a bullish engulfing over here. Again, 37,950, 37,955. The open and lows were nearly the same. September series 37,900 will be a key support area, I believe. Again, it resisted during the gap area. If you look at the structure over here, it resisted near the gap area. So any move above 39,100, I believe the momentum could shift onto the huge bullish momentum for Bank Nifty. And as I said, even if you look at the daily and weekly, there is a huge breakout onto the trend line breakout, which we have been discussing for quite a few sessions. I believe this momentum would continue onto the bulls side. And again, this has been retested over here. So stay long onto the Bank Nifty. I think Bank Nifty will outperform the Nifty and can lead a Nifty higher, which I have done a video if you remember. Bank Nifty is very well placed, and even if you look at the CNX Financial Services, they are also proving out to be a good bullish trend over here. So overall, the financial space is very bullish over here. Even we have form open and low nearly same, and I believe the momentum is very stronger into financial space. So keep a watch on which can take Nifty to the higher level. So as an expiry, I think there could be the option writers game between 17,300, 17,700, 17,800 on the upper band. You can look for a short triangle and keep a watch on India weeks about 21%. We may see a trouble coming into the option writers game. Signing off and have a profitable day.